member of the Budget and Energy and Commerce Committees, Buddy Carter. We've also got Adam Johnson and David Malpass here in studio. Great to see everybody. Tyler, let's kick things off with you. Are you expecting a spike in the CPI, given that oil prices are on the rise again?
I am expecting a spike, not only because of oil prices, but also because we had, on a seasonally adjusted basis, a 0.2% increase month over month in August 2022. That drops out, and that's probably going to be replaced by about a 0.6, as you said, percent increase month over month in August 2023. So for base effects alone, we're getting a pretty big pop. And I'm really going to be looking at how this energy price inflation might start to filter through to some of the components that have been weighing down on inflation in recent months. So in particular, airfares have been bringing inflation down a little bit in recent months. But that's going to be impacted as these higher energy prices filter through.
Yeah. Cheryl Cassoni will be along momentarily with the numbers, breaking that news. But Buddy Carter, let me turn to you before we get to the actual number. How does a higher inflation rate complicate things for you and your colleagues on the Budget Committee?
Well, it complicates things because obviously we've got to do something before the end of this month, whether it's going to be a CR or whether we're going to see a government shutdown, whatever it may be. But higher interest rates mean obviously that people are going to be hurting even more. Bidenomics is not working. When will they realize that? People are hurting. We just got back from the districts. We've been there for the last 5 weeks, and that's all we've heard about is how people are being crushed by gas prices, by grocery prices, by the staples that they need.
Adam Johnson, your thoughts on how important this is for the markets, given the fact that this number this morning is 1 week before the next Federal Reserve's two-day meeting on interest rates. Your thoughts?
It's incredibly important. I tell you, the real surprise for me, Maria, right now is if you look at the Fed funds futures markets, traders are saying the Fed's not going to move next week, which admittedly I find surprising. And that's coming from me, the optimist, who's been rooting for inflation to go down. So the markets are taking this one in stride. But this has the potential of being an ugly number simply because it would be the second month in a row that inflation would be going back up. You don't want to see that.
David Malpass, we've already had 11 rate hikes. Your thoughts on the impact on the Fed from this number out in 45 seconds.
I don't think they'll change on not hiking now. And the question is, what do they say about the future? Markets look forward, and that's really important. Right now, the yield curve is inverted. And so at some point, you have to rationalize what's going on worldwide. Japan's yields are way low. So how do you get out of that over time?
Yeah.
Good announcements would help.
So are we going to hear a forward-looking statement, though?
I think even the simplest thing of saying the Fed is interested in having future growth would help a lot.
All right, let's talk about these estimates. We are waiting on the number out imminently. The August CPI, month over month, expected to be up 0.6%. The August CPI, year over year, expected to be up 3.6%. When you strip out food and energy and just look at the core numbers, the core CPI is expected to be up 0.2%. The core CPI year over year for August is expected to be up 4.3%. Markets are worsening as we speak. Dow Industrial's down 70. NASDAQ right now down 71, and the S&P 500 down about 10 points as the number is about to hit the tape on the August CPI. Cheryl Cassoni with the number. Cheryl.
All right, so we're coming in line month over month for August CPI. This is the headline number, a gain of 0.6%. Again, that is in line with the estimates. But the year over year headline number is coming in a little bit hotter than expected. Probably those energy prices, folks, 3.7%. The street was looking for 3.6%. But remember, last month, that was July, we had 3.2%. So we have now gone on headline CPI from 3.2% to 3.7%. Core coming in month over month, a little bit hotter than expected. We came in at 0.3%. Street was looking for 0.2%. We did come in line on the core year over year number. But remember, that strips out food and gasoline, which is what Americans are dealing with right now. 4.3% in line with estimates. And that is actually down from the July number. So core year over year, it was 4.7. Now it's down to 4.3%. Looking at real average weekly earnings, down 0.1% for the month of August. But the big stick in this report is certainly energy prices. For August, energy prices jumped 5.6%. And food prices jumped 0.2%. Those are month-over-month numbers, guys. Also, if you strip out food and energy, again, you've got that kind of inline number, but still 0.3% on month-to-month, and then the 4.3% overall. Let me look at a couple of things here because I want to get into some of into the report. I know what it's going to say, but let's go ahead and look at it anyway. What they're going to say is that it was the energy price story going on. But here's what the government's commentary is right now. If my computer would cooperate with me. Here we go. All right. So they are saying that the index for gasoline was the largest contributor to the monthly all items increase. That accounted for over half of the increase of the headline number. Also contributing to the August monthly increase, continued advancement in the shelter index, which rose for the 40th consecutive month. So as I mentioned, the energy index did rise 5.6% in August. Every single energy component in the report rose. And then the food index increased, as I mentioned, 0.2% in August. But we also saw that, if you remember, Maria, we saw that uncomfortably increase in July as well. So going through with some of the, like I said, it's the energy story here. But if you look at gasoline, that again was the biggest piece of this. But whether it's electricity, utilities, all of those things are rising. I'm going to get into the other parts of the report, send it back to you for reaction. But remember, next week is the Fed meeting.
That's
September
right.
19th and 20th. So here we go.
Cheryl, I know you're going to dig down into really what was moving away from energy, and we will come back to you as you come up with the breaking news here. But I want to get everybody's initial expectation and reaction to this. Tyler Goodspeed, what do you think about this number?
Well, conventional wisdom would say we should be focusing on the core measures, and core measures are still looking like over the past few months they've been easing. But here's the problem. Consumers pay attention to two prices more than any others. It's energy and it's food. And so that is going to feed into inflation expectations. And as you know, and we just learned yesterday with the census estimates for income, real income in 2022, since the pandemic, wages have just not kept pace with inflation. And so I think labor is really going to start trying to catch up to where they should be on the wages front, the real wages front. It's disappointing that real wages declined last month. So I think that
they've been declining for 3 years, right? Household income is down for 3 years in a row.
That's right. And so you have this wage inflation that's going to be kicking in, inflation expectations, and let's remember, what are the sectors for which wage inflation matters a lot? Services. Services are about 2/3 of the U.S. economy now. So I think this is why it's going to be a longer road back to 2%.
Yeah, but you know what? Cheryl just told us it was also rent. Shelter, Cheryl, shelter was an issue.
Shelter was certainly an issue. I was actually just getting into that as well. And that was a 7.3% gain. And that is a month. That's a year-over-year number. So we're still looking at shelter 7.3% higher year to year, and then 0.3% month to month. Also, transportation services are still pretty sticky from a year ago, still year over year up 10.3%, but 2% higher. For medical care there's a little bit of a decline on a year to year basis, but medical care services as well. And by the way, I just want to point out one thing. I'm digging into the food right now. The food away from home index, so that's restaurants, that was a 0.3% gain for the month of August. But the food at home, which is really what Americans deal with, that's in your kitchen, that is still 3% higher over the last year. And cereal, bakery products, 6% jump year over year. Meats, poultry, fish, eggs, kind of flat at this point overall, but still those major grocery food groups, we're still seeing a piece of hot inflation data, or excuse me, those numbers are still a little hot this month.
I'm not surprised at transportation because of energy. David Malpass, your reaction?
The 0.3 on the core is probably what the Fed watches. That's what's in their model. But the numbers look bad for people in that real wages are down while prices are up. So that's what people feel at home. We have to observe that government spending is huge. People feel taxes coming off of that spending. And so that doesn't help them in their daily lives. My view is the Fed has to look at other tools, and the government as a whole has to realize that its regulations and are a key key part of what's driving up prices. And the U.S. is in a competitive, or has competition with the rest of the world, and especially China, and better get its act together faster.
By the way, the Securities and Exchange Commission just had a closed-door meeting a week and a half ago, David, and Gary Gensler was trying to push through all these climate rules, forcing companies to identify their climate risk. That's another one of those regulations you're talking about.
It's super expensive, and China doesn't do it, so
Right.
the differential is huge.
Adam Johnson, your reaction?
Well, the fact that an SEC chairman would actually try to be talking about climate regulation is completely misguided. With regards to what we're seeing this morning, Maria, there are effectively 6 pieces of data. There are 4 different reads on CPI, Consumer Price Index, and 2 reads on wage inflation. Here's my comment. Of the 6 pieces of data, 3 were in line, 3 were slightly hotter than expected. Not a great report in the near term. And yet, look at the futures. Dow futures only down 6 points. I think, Maria, that is because tomorrow morning we're going to get PPI, producer prices, and they're only rising about 1.5%. Now, I'm going to do something that would make economists like David Malpass cringe, but I'm going to do it anyway. I'm going to say if you just average CPI and PPI, you effectively get to it, right? You effectively get to about 2.5%, which isn't that much farther than above what the Fed's looking for at 2%.
So you're saying inflation is okay. The Federal Reserve's meeting in a week, 2-day meeting.
Yeah.
Yeah.
It's not okay. Let's be clear. Inflation is not okay. And Fed Chairman Jerome Powell is right. The job is not done. But inflation is going the right direction, and some measures of inflation actually are starting to get back towards an area where the Fed can say, all right, that's why we've paused.
Yeah, market's back at mixed here. Dow Industrial's now positive, up about 14 points. Okay, Buddy Carter, Congressman, your thoughts. What does this mean for policy and what you and your colleagues have to deal with in the next 2 weeks?
Well, first of all, David is absolutely right. The more government spends, the less you have. We have got to realize that it's this government influx of money that we've been sending out that has caused a lot of this problem. And don't forget, inflation is still so much higher than it was when Joe Biden took office. When he took office, 1.4%, and now look at it. And not only that, but as interest rates go up, and I surely hope the Fed doesn't go up on interest rates next week, but as they go up, people are depending on their credit cards now. 49% of people are using their credit cards for essentials. And as interest rates go up, then they're not able to pay those off. And that causes a problem. What we've got to do in Washington, D.C. is to stop the spending.
Yeah, well, that's what Cheryl was just talking about. Essentials, food, energy, rent. These are the essentials. Congressman, are we going to see a government shutdown? How are you dealing with the fact that the government will run out of money September 30th, and you've got 10 days, 10 working days to deal with this?
Well, first of all, a government shutdown would not be the worst thing that could happen. The worst thing that could happen would be to continue on like we are now with deficit spending. We've already spent $1.6 trillion more this year than we have, and $600 million of that is in interest. We have got to stop this. This madness of spending has got to stop. And a government shutdown would at least bring attention to it. Now, no one wants to see a shutdown. No one does. But at the same time, we have got to stop this. This business as usual and sending out money with the Democrats wanting to send out so much, this has got to stop, or we're never going to be able to solve these problems.
Well, hold on. If we have a government shutdown, which you're saying is not such a bad idea, how long does that last? I mean, that means government employees are not getting paid. For how long can we do that?
Well, government employees will get paid. That's the problem. They get paid, and if they're essential workers, they have to come to work. But if they're not, they still get paid. And Congress members will still get paid unless
so what's
they say
the
they don't
impact of
want
a
to get
government
paid.
shutdown then?
Well, that's the impact is it brings attention. It brings attention to the fact that in the very near future, for every dollar that we borrow, we'll be spending 50 cents on interest. And this is madness here. Think of what we could do. Well, with the money that we're spending on the interest on our debt. That's when we have got to get rid of this debt. We've got to get rid of this deficit spending.
David, what's your reaction to what you're hearing here? Government shutdown, it could be likely. David Malpass.
The world's looking to the U.S. for leadership, so it looks with consternation when the U.S. shows weakness and confusion within the U.S. So a key thing here is for someone to articulate a growth path forward. The commander-in-chief is really important in the relationship with China, in the buildup of the Navy that's needed, in finding a way through the semiconductor supply chain issues. We're at a bad spot because the Strategic Petroleum Reserve has already been drawn down at a time when Russia and Saudi Arabia are working to drive up the price of oil. So I think any leadership in any area that would get to more production, a stronger U.S. economy, is necessary at this time. And the government shutdown doesn't help with that unless they come out with some kind of a mutual bipartisan feeling that they're going to rein in government spending into the future.
Adam Johnson, from an investment standpoint, tell me your reaction to this report. What do you do now as an investor?
Well, as you know, Maria, I am the eternal optimist, and I am also 95% invested. I am okay with this report. I'm not thrilled with it, but I'm okay because I think that we're seeing a temporary blip due to significant spending in the summer on travel, as well as obviously what's happening with the price of oil back up at $90. If you ask me how I feel going out over the next couple of weeks, the shutdown concerns me because I don't think right now there is enough resolve to do enough about it, and it may get ugly before it gets better, and that means there's probably going to be some rough sliding. And again, I'm saying that as someone who's 95% invested. I have a little bit of cash, call it 3%. You never want to go above 98. So I think it's probably going to be rough over the next couple of weeks.
Rough meaning we'll see a sell-off in stocks?
We'll see, I suspect we'll see some selling in stocks. I suspect we're going to see some ugly commentary out of Congress. I think we're going to see people trying to put in Congress. I think we're going to see people trying to push one another. And unfortunately, I think we're going to see Republicans, as we've already seen, pushing Republicans. So there's not going to be a lot of unity on that front.
Tyler Goodspeed, do the Republicans get blamed if the government shuts down?
That tends to be the historical pattern, in part because it's a D.C. story, and the D.C. media tend to be a little bit skewed toward Democrats on this. At the end of the day, I mean, I think people in Washington need to remember that supply curves slope upward. So this is not the world of 2013 when Larry Summers was talking about secular stagnation. This is a world of 7.5% mortgage rates. This is a world of 3.5% unemployment. It is a world in which the supply of labor and capital are scarce. So when you pour a $1.2 trillion infrastructure bill onto this economy, when you pour a $280 billion semiconductor bill onto this economy, when you pour $1.2 trillion in so-called green energy subsidies onto a supply-constrained economy, a lot of that is going to go into prices. And that's why I continue to think that without some more spending restraint, it's going to be a long road back to 2%.
Yeah, well, tell me your thoughts on this upcoming issue over government spending, Tyler. If you were to see a government shutdown, what does that do to your expectations and moves in the stock market? Because that's a cycle that worsens. If you see a sell-off in stocks, doesn't that make things even that much more difficult?
So the interesting thing about economic recoveries is that they don't really die of old age. They tend to be murdered. And historically, oil price shocks are a serial killer of economic expansions. But you add up enough shocks that could include strikes and an equity correction, a government shutdown. You add up enough shocks, and it can push even a large diversified economy like that of the U.S. into an outright recession. And on the government shutdown issue specifically, yes, government employees do eventually get paid when they go back to work, which means there's no impact on nominal GDP.
Yeah.
The way we calculate the real output of the government sector is basically just hours times wages. So if there are no hours worked, if people weren't working because of a shutdown, then that shows up as a big spike in inflation in the government sector because you didn't have any output. So it would show up in real GDP.
Well, it's a great point, and I want you guys to give me your take on a story we've been talking about this morning. David Malpass, it's this Jamie Dimon remark. He was at the Barclays Financial Services Conference this week, and he said Americans are making a huge mistake to believe certain booming economy narratives. How would you assess the economy right now?
I think there are other shoes to drop, meaning you have a lagged effect from the interest rate hikes. So there's quite a few sectors within the economy that had borrowed money before the rate hikes, and they'll run out of that money. And so it's not a boom. And I think another thing that he said that's very important is the capital the federal government, and specifically the Federal Reserve, is this giant regulator of what the banks are doing, and it's not been working to encourage production. So the key takeaway from this morning, and I think every morning, is what did the government do today to either increase or decrease output within the U.S. economy? And for month after month, the changes that are being made reduce the productive capacity, and that's including in the bank regulatory sector that he's been talking about. Commercial banks are critical to making the small business loans that are needed within the economy, and they're constrained right now by the regulatory policy and also by the borrowing of the Fed. The Federal Reserve is one of the biggest borrowers, $5.5 trillion from banks and money market funds. So they're soaking up all the short liquidity that's needed by businesses to expand.
By the way, I just want to point out that the fugitive in Pennsylvania is now in custody. We'll have more on that throughout the day, but this is a story that we've been covering. The escaped prisoner in Pennsylvania is now in custody. Shokasoni, we're going to be focused on the producer price index tomorrow. You made the point earlier that you want to average those two. What are the expectations on PPI? Is this going to be as impactful on an economy and markets that we're seeing CPI typically is?
No, the PPI estimates for tomorrow, we're really not expecting a big jump, to be honest with you. What's interesting about PPI versus CPI, we had made the point last week that basically it would be nice to have PPI before you get CPI, because that's really the leading indicator, if you will. But we're expecting the PPI estimates for August are actually pretty flat at this point. But, we could see a surprise, but at this point, not expected. I do want to point out within the CPI report, this is really a services inflation story. Besides the energy price story and the shelter component, which I mentioned earlier, I was looking through gas prices. I mean, we hit a record in August of 3.98 a gallon for gasoline, so that's contained in this. But we're at 3.85 now. What that tells me is that the inflation story for the September reports that we're going to get, and PPI will give us a little bit of a snapshot of a look ahead into that tomorrow. That's going to actually continue, and that's going to be after the Fed meeting. So at this point, I was also looking at Fed funds futures, guys. The bet is still that we're going to see a pause next week from the Fed. But the question mark now is the November and the December meetings. And traders at this point, this morning, still are kind of leaning towards a quarter-point hike in November. So really, the data we got today didn't really change their arguments and their forecasts.
Does anybody on the panel think that the Fed will or should raise rates next week?
Not me.
Nobody.
No.
They have to create a path to rate cuts through more production in the economy, and they're a key part of it because they set the interest rates, and they're one of the big payers of interest rates. And so just articulate and communicate how we can get this economy to one that doesn't have to have 5.5%, much less 6% interest rates.
Well, I still don't see a growth strategy, though, in terms of, that's fine, making sure we're not going into recession, but is there actually a growth strategy that you can identify, Tyler?
Well, it's going to be hard when you're creating this battle between wages and prices that we saw laid out in the census report yesterday. In 2019, we had, in the United States, real median household income increase by just over $5,000, a record increase. Since 2019, real median household income has declined by over $3,000 because wage growth has not kept pace with inflation. I think in terms of a growth strategy, I would emphasize a pivot away from the sort of industrial policy, subsidies-based approach of the current administration back toward a supply-side approach that prevailed in 2017, 2018, 2019 that emphasized domestic capital formation through a competitive corporate income tax with a competitive full expensing for new investment in equipment. I would emphasize making some of the personal income tax changes that were in the 2017 Trump tax cuts permanent to incentivize people to return to the workforce, or folks who are maybe on the fence between staying in the workforce or retiring, incentivize them to stay in the workforce. But when we're at 3.5% unemployment and 7.5% mortgage rates, that says to me we're bumping up against supply side constraints, so we need to be focused on supply rather than stimulating more demand.
Yeah, Buddy Carter, do the Republicans have a growth strategy? Because obviously the climate change agenda out of this administration has actually got people questioning, where's the growth?
Well, that's absolutely right, and it's got us questioning it as well. And we've been pointing this out. And look, as the Democrats continue to pump money into the economy, again, the more the government spends, the less you have, and that's what we have to keep in mind. And I surely hope that the feds do not go up on the interest rates. I think we're teetering very closely here and going into a recession, and that would be awful if that happened.
Yeah.
People are hurting out there. Again, we just got back from a 5-week time in the district, and they're telling us. I was at the grocery store the other day. I saw 3 carts up front, the 3 grocery carts that had, meat and vegetables and sundries in it. And I asked the clerk, I said, what's that up there for? Oh, people couldn't afford it. They had to put it back. And people are hurting, I'm telling you.
Yeah, David Malpass. Your thoughts on the state of affairs?
It's a pretty clear anti-growth strategy. That's government spending and government taxes. That's energy policy. China sees all of that, and so they react to that by saying we're going to double down and really try to expand at this point because the U.S. is weakening.
I mean, as an investor, Adam, you're always looking for growth.
I'm always looking for growth, and I want to offer 2 data points that provide a counter argument. You ask about where's the growth, Maria. The Atlanta Fed has an estimate, real-time estimate of where they think GDP is. Admittedly, I don't know where they come up with this because it's 5.6%.
For the year or for the next?
For right now, for this quarter, the Atlanta Fed is estimating that our economy is growing 5.6%. Again, I'm the optimist in the room, and I think that's probably too high, but that's the Atlanta Fed. And it was what, 3.2, 3.3 previous quarter? So that's one data point. And then the other data point that I would note is that for the first time in about 5 quarters now, we're seeing analysts across Wall Street starting to increase their estimates. And I think a lot of that has to do with the fact that inflation has come down, supply chains have normalized. We do have GDP growth, and people, thank goodness, are still employed at a rate that is well below 4%. And even though they're getting squeezed by inflation, they do have money and they are spending it. That's good for earnings. So you ask me, what am I doing as an investor? That's why I'm 95% invested, Maria.
Yeah, I mean, Cheryl, you've been looking at all the data within this number. We're talking about no growth strategy here, and yet what are we looking at this morning? Inflation is still an issue. You know, growth from the Atlanta Fed, 5.6%. I'm not sure where that comes from, but the GDP wasn't anywhere close to that, the last GDP.
No, it wasn't. I mean, we're actually, in fact, GDP, remember, the last read that we got came in lighter than expected. So, you know, we're sitting at about 2%, which is, and we saw, remember, a tick down from the first read for the second quarter. We're still waiting on the final read. But I think what's interesting within the inflation story, and especially with what we're talking about with regards to the Fed, is the fact that, you know, I'm watching Treasury yields right now. Those are actually jumping. Treasury yields are on the rise because of the data that the market is seeing within this report. And we're talking about, and, you know, Buddy Carter was talking about the food story. I didn't really even get into that, but some of these numbers are really surprising to me, the jumps that we're seeing. I mentioned bakery and cereal items. I mean, these are basic staples of a school lunch, for instance. I mean, you look at, like, cookies are up almost 9% year over year. You know, beef, he mentioned beef. That's a 10.2% jump year over year. I mean, these are basic staples that the average American family needs, uses to survive. Flour. I mean, all of these numbers are hot numbers.
Yeah.
White bread. I saw that last month. I saw it again this month. White bread is up about 6% year over year. So these are unfortunate realities. And I think what you're going to see, going back to GDP, if I can pivot back to that really quickly, is I think you are going to see consumer spending start to drop off this fall, because over the summer people were spending, but they were saving less money. They were charging more on their credit cards. cards. Jamie Dimon, we made the point yesterday. Look, he sees the credit card bills, Maria.
That's right.
He's talking about the consumer. You got to listen to that.
Yeah, I don't understand, Buddy Carter, why there's even a fight about spending right now. I mean, if we're all talking about inflation that is still an issue and Americans are feeling it at the grocery store, isn't the first line of defense to slow down the spending, stop digging the hole?
You would think so. Yeah, I mean, the first thing I learned when I became a member of the Georgia State House of Representatives was when you're in a hole, quit digging. And we're in a hole. We got to stop digging. But the Democrats don't seem to understand. They just think you just spend and spend and spend, and that's going to resolve all the problems. Well, it's creating all the problems. The more the government spends, the less you have. They have to understand that. I was with the Georgia State Senate yesterday and down in my district, and they were having a meeting down there. And the chair of the Appropriations Committee was telling me, we've still got millions of dollars from government programs that we got to figure out how we're going to spend it.
Well, that is what is going to be on the docket for the next 10 days for sure, Congressman. But I know a priority is getting the defense numbers in place, the appropriation bill for the DOD. Do you have any news for us in terms of where that stands?
Well, we talked about it last night in our WHIP committee meeting, and I think we're in good shape. I think we're going to be able to get that through. We should. That's something we should all agree on, and I feel very confident. They've done a good job in putting that together.
Yeah, Adam, do you think the markets are focused on the potential of a government shutdown? Is this important from an investor standpoint?
I think it's out there, but, you know, we've seen this movie before. There are government shutdowns. They happen. I mean, I remember the one that was so bad about 10 years ago when sequestration, if you remember when they called it that.
That's right.
It went on for, what, 45, 50? I lose track the number of days, but we got through it.
And now we know that big technology CEOs are meeting this morning in Washington. What's the most important message David Malp has that they need to send to Washington?
That they want to find a way through the regulatory morass. But also important is the UAW strike here. As you think about where we're going, I don't think it's the government shutdown that's the key thing. People realize that the workers will still be there. So the bigger thing is, how do you get to the future in terms of your economic policy that allows growth?
Yeah, and growth in terms of the number the Atlanta Fed is talking about, David, 5.6%. Reaction there?
You know, they look at some of the detailed indicators in the economy, but it's not forward-looking. So there might be a little bit of growth now because people are spending off of the summer cycle. But the question is, looking into next year, where is that growth? Where's the beef? Where's the growth going to come from? And you need regulatory policy changes in order to get there.
Well, and one issue that caused people to think, well, maybe recession is not on the horizon, Tyler, is the fact that retail sales have been doing well.
Retail sales have been doing well. There's a lot of inertia in the labor market. There's a lot of inertia in consumer spending on services. That's just very, very inertia in consumer spending on services. That's just very, very sticky, and it takes a lot to push consumers into a period of contraction in their spending on services. Yep. So we saw that also in the recent jobs numbers, because we saw wage growth went up in June and July. That tends to attract workers into the labor force, and that's what happened in August.
Great
we saw
conversation.
A big increase in labor force
Great conversation, everybody. I'm sorry to interrupt. Tyler Goodspeed, Congressman Buddy Carter, David Malpass, Adam Johnson, Shel Casoni. Thank you so much. 30 minutes away from the opening bell. We've got a market that is fractionally higher. Don't forget to join us tomorrow morning. My interview with the